It's no surprise, guys, the best performing stocks in recent months have been high growth stocks, and the trends are actually fairly common between these companies. They're typically AI based or subscription, software as a service, and or they actually pose a threat to disrupt an industry. And most of them do this by growing by at least 20% year over year on their revenues. And here's the kicker, most of them are actually money losers and they don't make any profits. But it seems like in this environment, investors just don't care about profits right now. They want to see growth and they want to see businesses that are changing the way that we do things traditionally, which have not been as efficient. So that's why companies like Square, like Shopify, these high flyers have really taken over the market as the best investments right now. In fact, here, let's look at some of these growth stocks, which aren't as much in the spotlight as, Tesla, Shopify, but have had phenomenal runs since their March lows. Carvana is a stock that's up 557% from its March lows. Etsy up 307% from its March lows. And here's the best one, guys. Wayfair up 1,143% from its March lows. And funny story, I actually covered the stock during the market crash as a stock to watch out for. So if any of you did actually look into that further and made an investment in Wayfair at that time, congratulations. But now the question for this video, the premise really is, how do we find these high growth stocks? What do we look for in these high growth stocks more specifically to figure out if, they're actually going to see 100, 200, 500% gains in the near future? Well, today what I'm going to do is I'm going to share with you guys kind of a checklist that I go through when I look at businesses, whether it's high growth or not, but this video is specifically high growth. And I'm actually going to walk you through my process to see if a stock is actually worth looking into further and researching, or if it's a business that, it's not worth the risk here. So hope you enjoyed this video, guys. I know there's going to be a ton of value from this. So all I ask in return is to hit that like button down below because it helps a ton with the channel. I know it's usually content like this that you find on, premium courses that you buy and that kind of stuff. So I really do hope you appreciate the time put into this video and the research put into this video to make your life easier, to narrow down what your next high growth investment could be. But hey, if you do want to know exactly what high growth stocks I personally hold or when I buy and sell these stocks, check out the link description down below to our VIP membership group where I pretty much disclose every trade that I make as well as my portfolio. Okay, getting into it, here's the first thing I look for. So contrary to popular belief, fundamentals do matter, and a business that's trading out of whack will eventually see its fundamentals catch up to it, or the stock price will drop to match the fundamentals at some point. Sometimes it takes months for this to happen, sometimes it takes years, and you could look like a genius during that time. But if you're on the wrong side of the trade, when that stock does decide to correct to match its fundamentals, you could be in big trouble. So you may be asking, well, Nick, what are the fundamentals you look at to determine if it's a good business to actually invest in here? You can use whatever website you want here for this information. Yahoo Finance is probably an easy one, which is free. But the key metrics that I look for here for this section is market cap, revenue, net income, and free cash flow. So I really wanted to make this simple and give you guys just 4 quick things to glance over here to quickly decide if a stock is even worth spending time on to continue further research in. The first 2 things that I look at is their market cap and their revenue, because that helps me determine their price to sales ratio. When I determine the price sales ratio, if you watch my previous high growth videos, I typically like to see as low of a ratio as possible. Typically, if I can find a high growth company that's growing well and has a price to sales of under 4, it's a pretty attractive valuation for me. Now, if it's under, say, a 6 or an 8, I'll probably still consider it as an investment. Under a 10, it's kind of pushing it there, and some cases will have exceptions, but if you have a price sales ratio of like 20, 30, 50, typically not a stock that I'm personally going to be putting my money into because the risk is just too high there. So really all I'm trying to say is you want to calculate a price to sales ratio to be as low as possible, and if it's a high growth company, That's an attractive start. Next, you want to look at the revenue and you want to make sure this is kind of trending in the upward direction, increase year over year. You want to see that it's actually a business that's growing, not a business that's staying stagnant or shrinking. The third thing was net income, and net income is extremely important because this eventually will be the reason why you invest in a business, and it's, in other words, the profits that the business makes, right? You want to see eventually some profits. And right now, if they're not profitable, that's okay, but the question is, are they getting close to profitability? Do they have a projection to get to profitability at some point? Or is it just a business that's losing tons of cash and has no way of getting there? For me personally, it has to have some sort of path to profitability or be profitable right now for me to consider investing. And the fourth thing here was free cash flow. Like I said, if a business is not profitable right now, they need a path to profitability, and free cash flow is usually a metric you can use to determine if they're getting there. If they have positive free cash flow today, that's a very good sign that they will hit profitability sometime in the near future. However, if their free cash flow is also trending in the wrong direction, that's a red flag. You need to understand for that particular business why that's happening and if there's any way they can fix that and turn things around. So the next thing I look for is revenue growth. Of course, guys, this is a high growth video. You're looking for high growth stocks. You want to make sure that they actually have high growth. So again, Yahoo Finance is great for this, and you could find a ton of information on there, including information like what analysts are projecting here for revenue growth in the current year and the next year. For a high growth company, I want to see this at least a 20% year over year. The higher the better. But if it's like say 5%, 6%, 8%, I mean, I may still consider it as an investment, but it wouldn't be in my high growth bucket, and thus the potential for the stock to gain say 1,000% in the next few years is fairly low in my opinion. So this right here is kind of my second step in this whole process, and as long as we have at least around a 20% growth year over year, I'm happy and they check the box. So this is the part that really matters for these kind of businesses, and a lot of investors pay no attention to it. If you guys, you're investing in a company and you have no idea what their assets, their liabilities, their balance sheet looks like, that's a big concern. Now, if a company has a terrible balance sheet, there's a very low chance that I will actually invest in them unless there's some other compelling reason to actually get me to put my money in there. And this is because when there's tough times in the economy, like right now, a company needs to really fall back on its own cash, on its own investments to really keep things going. If it's a company that's debt-ridden already today before something hits and then things get worse, they need to raise more debt, they could be in a very, very tough position and it could end pretty badly. So if I'm investing in a high growth stock and I'm putting significant amount of capital in there, I want to make sure that they have a good amount of assets. Typically, I want to see more assets and liabilities on that balance sheet. You can usually find this information again on your favorite website, or you can just go directly to the 10K or 10Q on the SEC's website of a particular business and look at their balance sheet there. It'll tell you, how much cash they have, their investment, their liabilities, their debt, all that kind of stuff, and you can determine what their assets and liabilities is. Now, as long as their assets are more than liabilities, I'm okay with it. I like to have it as high as possible, like 2 times more assets or 3 times or like 5 times in some cases. Like I believe some of these high growth companies have high assets liabilities, which is extremely strong, and that's another huge reason for me to actually consider investing in them. And this also kind of ties back to my previous point on the net income. So if a company is losing money, they're still gonna have to pay that cash that they're burning, right? So that's where they're gonna fall back on their balance sheet. You're gonna look at their cash position, and if they're running out of cash, but they're burning a ton of cash every single quarter, kind of put 2 and 2 together there, it's not gonna end well for them. Okay, so now at this point, guys, if a company has actually met the criteria for all of these 3 things here on my checklist, it's time now to double down and actually learn a ton about this business. Go to the company's website, read the About Us section, read like different products that they sell, services, whatever it is, read their investors relation page and different presentations that they have available there. Listen to conference calls, listen to other things, listen to interviews on YouTube of the CEO. There's tons of ways to learn about a business, its management team, and kind of their direction that they're going, because at the end of the day, guys, you are investing in a company, in a business. It's not just a ticker symbol that moves up and down. Remember what I said, fundamentals do matter eventually. Now, I'm not gonna lie, I'm gonna be real with you guys for a second. So, when I first started investing, I would just go and, follow the herd. I hear a popular stock, I'm like, this sounds like a great investment. I'm gonna put my money into it, and the stock is gonna go up over time, right? You put your money in, and then maybe they have an earnings report, something bad comes out, the stock drops 20%, 30%, whatever it may be, right? That happens, guys, and guess what? If you don't know the business, you're gonna question yourself and you're gonna sell out at a loss. However, if you understand the business inside and out, you understand everything from its balance sheets to what it does, to, how they make money, all this kind of stuff, you're going to be much more confident and be like, hey, it's a 20% dip and it doesn't really make sense here. It's a short-term issue that they're facing. They're going to turn things around. I see the future for this company. I'm going to actually go in and put more money into this investment. And then over time, if you're correct about that, you'll end up with much, much more gains. I've done this with plenty of companies in the past that I understand really well, and it's worked out more often than not, guys. So that's just something that I would give you, something that I've learned over the years. And personally, I would not invest in a company anymore unless I understand the business from A to Z. Now, as a bonus for sticking around to this point, I want to add in one more thing here, which shouldn't really be a determining factor, but it's something you can look at to figure out what the overall sentiment is around a high growth stock that you're considering investing in. Now, you can use websites like TipRanks or FinWiz or whatever other website you want to figure out what analysts think about the stock, price targets they have set on the stock. Look at what hedge funds think about the stock. Are they buying a ton of shares right now? Are they selling shares? Also look at insider activity. Are insiders of the company buying a ton of shares right now? Are they selling a ton of shares? You want to understand all these things and kind of just have that at the back of your mind. Now, I will say this, don't make a decision solely based on that, because more often than not, if you just follow those indicators, you're probably not going to end up with great investments over time. But it is interesting sometimes because you'll see these businesses, you'll see these opportunities. The general media, like public media, is kind of bearish on it, but you'll see hedge funds buying a ton, insiders buying a ton, analysts have high price targets on them. But you go on CNBC and they're just like, yeah, this stock is done, blah, 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 all this stuff. And if you've done your research and you agree with kind of the hedge fund and stuff, that's just another indicator really to help you with your investment. But like I said, I would not solely base an investment ever on what analysts think or hedge funds think or insiders think of a company. Just remember that analysts are typically very wrong about their projections, and sometimes they have ulterior motives as well, depending on the firm, to upgrade or downgrade a stock. So just remember that, guys. I don't want to see any of you get burnt because an analyst said to buy a stock. Do your own research, be confident in your decision, and just remember, at the end of the day, you're the only one who's responsible for your money. I also want to say, guys, that just remember to manage the size of your positions. Now, you guys know that I invest in some of these high growth, kind of risky stocks here. Uber is a good example. I've been public about this, and it's a stock that I still continue buying to this day. Yes, there is a chance that Uber could face struggles. Yes, there are risks with Uber. However, because of that, I keep it at a certain percentage in my portfolio. I'm not going to make Uber 10 or 20% of my portfolio. That'll probably never happen unless my current investment increases so much that it becomes that size of my portfolio. But there's no way that there's net new capital that I'm putting in at this point to make Uber that large in my portfolio. I understand the risks, and I understand there is a chance you could lose a good chunk of your investment in Uber, which is why I keep it relatively small in my portfolio. But I see the upside, I see the high growth, and I want to take advantage of that, which is why I still have some exposure to the company. But anyways, guys, I hope this video was useful. I hope it was helpful. And remember, all I ask in return is just smash that like button down below to help push this video out to others. And share this with a friend as well. High growth stocks are all the rage right now. And if you follow this kind of general guideline checklist, it'll help you become a much better investor, not only with high growth stocks, but any stock out there in the market in general. Thank you so much for watching, guys. Don't forget to invest positively, and I'll see you in the next one. Peace.